Well, good morning. I'm Jagender Rana. The topic of the day is inclusive insurance. Inclusive insurance. So, inclusive insurance is critical to financial inclusion, community stability, and overall sustainable development, as it empowers individuals and families to make choices they would otherwise not be able to make. So, against this background, the Inclusive Insurance Working Group of different countries are working on it to the inclusive growth of emerging economies and to the resilience of their vulnerable communities by developing tailored risk transfer solutions. Insurance remains one of the most underutilized financial tools in India among low income and marginalized populations, despite its critical role in providing financial protection and risk management. The traditional insurance models, often centralized and complex, have failed to penetrate the informal sectors and remote communities effectively. Effectively. So traditional insurance models, often centralized and complex, have failed to penetrate the informal sectors and remote communities effectively. This gap has led to the rise of the community-based organizations, that is called CBOs, playing a vital role in promoting inclusive insurance. These organizations act as facilitators, educators, and enablers in delivering affordable, accessible, and tailored insurance solutions that meet the unique needs of underserved population. So, let's understand what is inclusive insurance. The inclusive insurance refers to insurance products and services designed specifically to meet the needs of low income individuals, informal workers, and vulnerable groups. The core principles of inclusive insurance are affordability, accessibility, transparency, and suitability. It is often delivered through innovative channels and models, including microinsurance and community-based schemes, to reach the last mile. So, community-based organizations are grassroots level institutions that are deeply embedded in local communities. They include self-help groups, cooperatives, NGOs, credit unions, faith-based groups, and other membership-based entities. The proximity to the target population makes them ideal conduits of dissemination or disseminating information, building trust, and delivering services in a manner that traditional insurers often cannot achieve. The key role of CBOs in promoting inclusive insurance is that awareness and education must be there. One of the most significant barriers to insurance adoption is the lack of awareness and understanding of how insurance works. So CBOs are instrumental in educating communities about the importance of risk protection and the mechanism of insurance. So through workshops, community meetings, and peer-to-peer engagement, Demystify insurance concepts, explains policy benefits, and correct misconceptions. Then trust is crucial in insurance uptake, especially in communities that have historically been excluded from formal financial services. So these community-based organizations, being familiar and trusted institutions within the community, help build confidence in insurance providers. The involvement lends credibility to insurance schemes and reduces skepticism. The customized product design. CBOs have deep insights into the socio-economic realities, preferences, and risk profiles of their communities. So by collaborating with insurers, they can help in co-designing insurance products that are actually or that are culturally appropriate, need-based, and easy to understand. This participatory approach enhances product relevance and uptake. Then premium collection and claims processing. Due to their established structure and network, these community-based organizations can act as intermediaries in premium collection and claim disbursement. This localized management reduces transaction costs and ensures timely service delivery. They also assist in claims documentation and grievance redressal, thereby improving the customer experience. And they monitor and provide feedback mechanism. CBOs serve as effective feedback channels between the insured and the insurers. They can track coverage effectiveness, report service issues, and suggest product modifications. This continuous feedback loop enables insurers to adapt and improve their offerings in real time. There are some case studies on effectiveness in action. Say, for example, SEWA in India. SEWA, SEWA. This Self-Employed Women's Association, that is called SEWA, Self-Employed Women's Association, in India has been a pioneer in providing micro-insurance to women working in their informal sector. Through SEWA's insurance arm, Vimo Seva, members receive access to health, life, and asset insurance. SEWA's community-centric model has resulted in high renewal rates and strong member loyalty. So their integrated approach of financial education, product bundling, and claims support showcases the power of CBOs and scaling inclusive insurance. Then comes CBHI in Rwanda. Rwanda's community-based health insurance, that is called CBHI, community-based health insurance model has achieved over 90% health insurance coverage. So managed at the district level by local cooperatives and supported by government subsidies. The scheme has significantly improved healthcare access and financial security. The involvement of community representatives in governance has ensured transparency, affordability, and accountability. Then challenges faced by community-based insurance model. So despite their potential, CBO-led insurance initiatives faced several challenges, like limited technical capacity. Many CBOs lack actuarial expertise, data management system, and risk assessment tools. Next is sustainability concerns. Without adequate funding, or partnership with formal insurers. Community-based schemes may struggle to remain financially viable. The regulatory barriers. In some countries, community insurance models are not well recognized within the regulatory framework, limiting their ability to scale. And claims management complexities. Ensuring timely and fair claim settlement remains a persistent challenge due to logistical and procedural hurdles. So policy and partnership recommendations are like this. Government, donors and insurers should invest in training CBOs on insurance principles, technology usage and data analytics. And insurers should view CBOs as strategic partners and collaborate on product development, risk sharing and capacity enhancements. Policymakers must recognize community-based models within insurance regulations, providing frameworks that ensures consumer protection without stifling innovation. And leveraging mobile technology and digital platforms can help CBOs reduce administrative burdens and enhance service delivery. That means community-based organizations are indispensable to the mission of making insurance truly inclusive. Their grassroots reach, social trust, and deep local knowledge position them uniquely to serve as bridges between formal insurers and underserved communities. So when empowered with the right tools, partnership and policy support, CBOs can transform the insurance landscape by enabling equitable access to financial protection for all. So as the world moves towards more resilient and inclusive financial system, integrating CBOs into insurance ecosystem will be key to reaching the last mile and leaving no one behind. So this inclusive insurance refers to those insurance products through which adults have effective access to insurance and savings products offered by insurers through formal providers. Inclusive insurance products includes all insurance products aimed at unserved or underserved markets. While these markets typically are in insurance markets in developing countries, so from an insurance perspective, they are not restricted to such countries. Microinsurance is a subset of inclusive insurance. In practice, the two terms are often used interchangeably, even though they are not the same. There is also an access frontier for inclusive insurance to recognize reaching the poorest, most rural people may be better accomplished through social safety nets. The focus of inclusive insurance should be on including the next most feasible group of customers. In many developing countries, insurance inclusion can grow multiple times by providing appropriately designed products for customers moving towards the middle class and having characteristics such as relatively consistent incomes, mobile phones, and education. A key objective of inclusive insurance is to provide access to insurance for unserved and underserved markets. So the estimated market potential is about 4 billion customers globally. Insurance has been identified by Access to Inclusive Insurance to have an impact on 9 of the 17 United Nations Sustainable Development Goals. They emphasizes the key role of insurance in supporting economic growth and of inclusive insurance, in particular in supporting the growth of developing economies. So inclusive insurance had its beginning in the 1990s when microfinance and institutions began providing credit life insurance to their micro loan customers. That's a simple life insurance products embedded in the loan. So much of the early growth has driven by non-profit organizations which recognize the need to increase the resilience of the low-income populations they serve. As many families pushed into or back into poverty every year by a single major risk event, often an insurable event such as illness or the death of a breadwinner. So a key driver of inclusive insurance growth has been innovations in business models. Early investors in inclusive insurance were able to attract expertise and provide risk-taking capital that has given rise to many innovations that have helped inclusive insurance becomes more commercially viable over time. This has led to growing interest from traditional insurers to the extent that several large multinational insurers and reinsurers are actively involved in the inclusive insurance market. So inclusive insurance customers tend to live in areas of the world vulnerable to extreme environmental events and catastrophes. Particularly during its early development, the motivation for developing inclusive insurance had a strong component of addressing societal needs rather, and helping to protect and support vulnerable groups such as women and itinerant or migrant workers. So some products were subsidized by donors and our government. This continues to be the case in, for example, addressing the impacts of the consequences of climate change. So as inclusive insurance involves significant effort and time to reach a scale, to become commercially sustainable, members of the value chain need to have aligned missions and motivations. Many companies see inclusive insurance as part of their corporate social responsibility, that's called CSR, understanding that profitability may be years in the future and so require a long-term perspective and plan for success. The clear messaging from the top of the company about the priority and importance of the inclusive insurance should help produce better results. Thank you. Thank you very much.